This is Scott Whitwam with your morning real estate investor update. In today's top story, changing markets. There is a migration occurring inside the United States. The migration is changing markets for real estate investors, as it looks like it may be changing the political election map as well. People are flocking from the Northeast and West to southern states. The states increasing in population gains are led by Texas, Florida, North Carolina, Georgia, South Carolina, Tennessee, and Arizona. There are some population losers, and these ones are led by California. Others include Hawaii, Illinois, Louisiana, New York, Oregon, and Pennsylvania. These changing markets will create new investment opportunities for investors in the coming years. A great demand for not only housing but also commercial and industrial will be needed in these growing states. I'm already hearing that commercial vacancies are rising in some of the states that are losing population. Savvy investors need to stay aware of these changing markets. In today's mortgage rate update, early gift. I remain hopefully optimistic that mortgage markets will bring an early Christmas gift in the form of lower mortgage rates. After about 8 weeks of inclining mortgage rates, we are finally beginning to see the light at the end of the tunnel. As all my investor friends who remind me that historically our mortgage rate interests are not abnormally high, I agree. It's not the rate, but the disparity between the current rate that owners have and what the rate that they would have by trading into a market if they become sellers. Bankrate is reporting that the national average for the 30-year fixed mortgage rate was down slightly this week at 6.79% compared to last week's rate of 6.92%. The 15-year rate is also down this week compared to last, reporting it at 6.14% compared to last week's rate of 6.22%. In today's wrap-up, real estate prices. As we get ready to close out the year, we can look back at what has been the slowest real estate sales year in many decades. Traditionally, this would mean declining home values. However, 2024 has been somewhat of an abnormality. As sales slowed, prices continued to rise, but at a slower rate than years previous. CoreLogic's Case-Shiller seasonally adjusted index shows that home prices are still growing at a rate of 3.89%. This is down from the previously reported 4.28% increase. CoreLogic's home price index year-over-year rate has been decelerating month over month after peaking at 6.54% in February of this year. With lingering inflation, it is unlikely that we'll see large price increases again until interest rates drop significantly or inflation declines significantly. Be sure to subscribe to the Morning Real Estate Investor Update and catch me on the weekly Whitwam Wealth Real Estate Podcast.